Hello and welcome back to another weekly video for the Forex Triple B. My name is Jordan, and as you know, in this video, guys, we're discussing basically some of the interesting setups that took place from the previous week and some of the setups which we would personally be finding interesting, and also give you some kind of idea of what we're looking for when we're using our softwares. And of course, in this specific case, we're going to be talking about the Forex Triple B software. So if you're interested in this table, you can find it on the Forex Triple B official website, which is forextripleb.com. And under this link, you will be getting the table. So previous week started since the 5th, 5th until the 9th, which will be anything from Litecoin up until the top. So let's dig in, guys. Now, the first thing we're going to check is the crypto Litecoin. This is the 1 hour chart. I hope you can see the image well now. So how and where do we start? Well, when it comes to Triple B, the first thing you want to be checking is, of course, the filters. This channel or cloud or whatever you want to call it starts from right here, and up until this point we see nothing, right? Which means those filters were not in sync. There was no established trend, and once that happened on the higher time frames, this is 1 hour chart, we started looking at this cloud right here. So what happens is we got a pullback, and you probably remember we did a video on that, but we got a breakout of a daily triangle. Let me see if I can pull it up here on the terminal. So that's approximately what happened here, right? I did a video on this right here somewhere during the breakout on this price, and you can see what's happening, right? We pushed up, bouncing back, but basically, if you're using chart patterns alone, that would be also helpful to you, because at that moment you would be expecting for the price to continue to the upside. So it's kind of having an extra confirmation there. Excuse me. So basically, after these pullbacks, the price managed to go ahead and touch the band here, this green stuff, right? And this is where we're getting the breakout, which would be triggering a trade. You can also see that we have the weekly pivot plus daily pivot. Okay, all that's happening right here. And then we have more levels from previous days, which are kind of getting at the same zone and holding the price, right? So if you're using this kind of support resistance instruments, that will be a big help, because we know this level is holding and we want to see the price bouncing off of it and continuing higher. What else we can see is that on the 4 hour chart, there are no divergences on the MAs, just this one, and then we have hidden divergence, which is yet another confirmation for bullish continuation here. So when we put all that together, in general, this setup starts to make a lot of sense, at least if you ask me. I personally like it. Euro franc, another bullish idea. Again, this is the 1 hour chart. However, notice that this time the 4 hour chart is not in a strong bullish momentum, but just bullish. The settings for the filters that you're looking at in this screenshot are set to medium, if you're curious about that, of course. And then back to the chart. So the first thing I would be drawing on the chart is that we can clearly see the price is trading inside a bullish trend. We can more or less identify good trend lines, good trend line at least on the bottom side, right? On the top, we got a false break here and so on and so forth. It could be drawn in a different way, but the bottom part, it's pretty clear, and the price is good that we're respecting it right there. Respecting this trend line comes along with weekly pivots, right? From the previous week, we have support to right here, basically a zone rich of levels. So once the price is touching the bands right here, this is also kind of a double wave, at least in my opinion, the way I see it. That means once the price is breaking above the most recent fractal, so touch fractal, right? Unfortunately, we cannot use those because they did not appear until that time. So this is where the breakout would be triggered if you will be trading this kind of setup. What else we can say is that we have a trend line breakout coming at the pretty much same time, which is yet another confirmation. And the good part is that the price is now trading above the current week's pivot point. All right, so the price going and breaking above pretty much this zone starts to look very decent, because we want to see the price going and trading above these levels. Okay, you have the previous zone right here in terms of price action, but overall that would be the idea behind it. Immediate push to the downside, and we're bouncing at the bottom. What else was interesting here? Litecoin, second one, triangular breakout is one of the interesting parts that you might be looking at in this moment. Of course, this is 15-minute chart, nothing crazy about it. But if you have the higher time frames idea of where the price should be going, that could be also used, even if you're not using Triple B, right? Chart pattern breakout, fractals are being broken, pivot, weekly, sorry, not pivot, weekly resistance hold. So it all starts to come together when you put all these things for the possible entries. Then we have QEN. Now this is more or less a classical situation. I personally favor this one among all the other things that we just saw. If you're more conservative trader, you want to stick to the setups where things are pretty clear, or at least as clear as it gets. Now, in this specific situation, what we can see is that the price started pushing down. There was some bullish trend before that, but we're creating new lows. Price is holding the previous swings, continuing breaking these new lows, holding the swings, kind of getting into a range here, false breaks, and then we're next to the top of this zone. Plus, this is also where the previous swing low is, right? Over here. So we can see the price is fighting around these levels. And even though this could be tricky because now the price could be continuing higher, you have levels on the way, okay? Pivots and supports and resistances here supporting you. You have price action level. This is where the closing prices are. You can extend it a bit to the downside, but overall this is the zone. And as long as the price is here, you want to be looking for sells, okay? So that's pretty much how I see it. Now, in terms of structures, I don't know how to call that. What I would be calling it, if we had to talk structures, is probably some kind of a pullback here. Okay, definitely not an impulse. It doesn't carry the validations of a pullback, if we can put it this way. And in this case, even if it fails, that's why I love trading ranges, by the way. So let's say this is your entire zone, starting from the very spikes here up to this level, right? It becomes a huge zone. But again, you saw where the smaller levels are, so something like this. The idea is simple. Even if it fails in terms of pips, right? Because the actual percentage, if you're using percentages, doesn't matter how many pips you're risking, right? If the volume and your account balance allows it, you can always be risking 1%, regardless whether you're actually having a stop loss of 100 pips, 50 pips, 500 pips, doesn't matter. You can always adjust the risk to being a certain percentage. But when it comes to pips, the smaller the target is, which means the smaller the stop loss in case you're using fixed risk reward ratios, the better. Because in one moment, you're requesting from the price 15 pips, right? If this is your stop loss and your target one is 1-to-1, the target or the move that you request from the market is again 15 pips. On the other hand, if your stop loss is 150, with one-to-one, you will be requesting 150 pips. In simple words, what I'm trying to say is, in one case, you're trying to predict the market and the direction of the market for 15 points, which is much, much easier to do, rather than predicting the market for 150 pips in a given direction. Okay, so that's why trying to minimize the stop loss in terms of pips brings a lot of value, and especially when that happens inside ranges, it's very easy to identify these situations and very easy to get the targets, because if that level holds, you know, there is probably over 80% chance that the price is going to reach the bottom of this zone. Now, I personally never try to catch the absolute bottom, right? Because sometimes you will see this is the range, price is playing inside of it, and sometimes it will go straight to the line, sometimes it will break slightly below. Okay, in other cases it does this. So if you entered somewhere around this zone and this is your protection, why fight the last few pips? All right, you need to be able to identify where the strong levels are. So if this is my bottom, I need to figure out where the levels are. So here I'm definitely looking at zones, and this of course is the absolute minimum, right? The bottom of the channel. But these three levels, I would be paying a lot of attention. So where do I put my targets? Not just Triple B, any given strategy. Definitely not here. This is too much. You have no idea whether this level is going to be reached or not, right? But if my risk reward ratio allows it, as in this case it does, okay, the very first zone, and you can see it here how the price is reacting out of this level. You see, I would try to collect, if my risk reward ratio allows it, I will try to collect my first target right there. Okay, if let's say my entry was here for some reason, trend line or whatever, and then this is my stop loss, and I'm doing one-to-one for the first target, then I can be getting a trigger on target one right here, right? I need to look lower. So then I keep on searching for this best optimal place. And the next optimal place for this purpose has the potential to be right here, or maybe even slightly lower, anywhere in between those two lines. Okay, so ranges, I absolutely love them. Plus, if you have the knowledge to go ahead and implement inside of it waves and structures, it becomes a monster. This one we covered, Euro Kiwi, nothing really interesting here, so I'm going to skip it. Euro Pound for the bullish side. Now this one I personally would be skipping for one simple reason. This doesn't tell me anything, just like this one, right? The trend only switched right here, and as much as I would be willing to go ahead and buy, this is absolutely, it doesn't matter how I look at the consolidation. I don't personally know how to trade such small moves, such contractions, just like here. The only way here that there could be something for me is by breaking the absolute high of this zone, which means for me personally, again, I'm not saying this is the only way or the right way, it would be breakout above here. Okay, but as to the how do we call that, the Triple B rules, this is it. This is where the fractal is, right? So just a quick note about this one. And again, guys, I mean, if you're following these videos, you probably understand by this time that I'm a very conservative trader. So all these examples, they're put here to show you that there are many tradable situations, okay? There will be people with much higher risk tolerance. There will be people with very small accounts, and they're trying to grow these accounts, and they're doing aggressive trading. So let's say you have 500 or $1,000 account and you want to grow it fast because you need the capital, right? You don't get the capital from some other place. You're growing your own capital in order to trade more conservatively with different trading styles. Then you need to be aggressive, right? So just because I'm not going to be taking these trades, it doesn't matter. You shouldn't be taking these trades if this is what you're looking for, all right? So there is a very big difference here. And that's why we're kind of trying to balance things out and show this kind of example, show that kind of example. Very important is also, as I was just mentioning this, to figure out what are your goals, okay? If your goal, if let's say you have a pretty much large account and you're looking for, I don't know, 5% monthly or 3% monthly consistently with as less risk as possible, well, then you probably don't have any business trading the 15-minute chart, right? You might be focusing on 4-hour chart setups because then you get much less noise. Then you get much more time and freedom, okay? But if your job is to grow the account, then you need to be going a bit more aggressive because let's face it, if you're trying to grow $500 or $1,000 into, let's say, 10K, and you're doing 2% a month, you can do the math. When will this happen, right? If you're trying to practice, let's say on live account, and you start with 1K, and then you have 10, 20, 30, 50K on the side waiting for your ready capital, you're just trying to prove yourself that you can do it live, then this is a third scenario, right? I mean, you gotta look inwards and see what the goals are. What are you doing? Why are you doing it? And then you should be going and trading appropriately. As always, my recommendation, first of all, would be to get the software or get the strategy. Doesn't matter if it's this one or anything else, manually or programmatically giving you some ideas on where to trade. Start doing it on a demo account, right? Start with a demo account. Always. If you cannot do it on a demo account, I guarantee you live trading is much more emotional, and you will be 10 times sure you can be that you're going to fail as well, all right? If you cannot handle even the demo. So that's about this. And last but not least, Aussie franc. Now this is where Triple B identified the bearish situation. We can see what's happening with the MAs, the lack of divergence between these swings right here, which is a good point. That zone that was reached, multiple false breaks, and the price started again going into consolidation, okay? And now here, at that very moment, this is the thing which I don't like, okay? Yes, we're bouncing and holding these levels, but if I'm identifying a range and I'm not breaking out of the range, which is right here, this is the bottom of the actual range, and this is the very top of it. So if I'm doing the breakout, I will be waiting for the price to go above here and then continuation, or go below here and then continuation, right? Because now it's kind of trading right at the level, right at the support zone. This part I don't like. I would personally be skipping this trade, okay? On the other hand, people see it in a different way, right? And what could be another possible view of this rather than a range? Well, as I mentioned in the beginning, the highs, the price is holding and the price just switched down. And this is, by the way, a very, very interesting example, and very interesting week, which I forgot to mention in the beginning with all these other examples we checked. When you start looking at the switch of this cloud here, okay, this channel or a band which follows the price in a given direction, that gives you the idea where the price changes. Okay, usually, not the price, sorry, the trend. Usually you have trend where you have cloud, let's say you have the green cloud, Then you have whatever it is price doing. This changes and becomes neutral, meaning no cloud below or above. And once the new trend establishes, then you start to get the new cloud. And this is exactly what's happening here. Where I'm going with this, I'm trying to say that if this is the beginning of the trend and you have extra filters, especially if you know how to understand the bigger, larger structure of the markets, that could be extremely helpful, because then you can milk it for much longer. Then you can extend your targets. Okay, but of course, this is a bit more advanced. I'm just saying one of the easiest ways to identify this is to look at where the trend, the newly formed trend started, and then use it in your own advantage to get more pips out of the given situation. Okay. So you can see how aggressive these moves are, and that could be another argument why this would be a tradable situation, by looking at it as a newly formed trend rather than a range with a breakout. Okay. Plus the 4-hour chart here, as we said, was supporting with the lack of divergence, which means we probably have more room in that direction. So if you have any questions, guys, that would be all for this video. Drop comments below, you know, just even if you want to say hello, that's still good. We appreciate it. But again, if you have questions on any of the trades, any of the setups that you're wondering, hit us, okay? Telegram, YouTube, comments, whatever it is, we'll be happy to get back to you. Have a wonderful week, and I'll see you in the next video. Bye for now.